Have you ever wondered what keeps our economy alive every single day? Every UPI debit, every ATM withdrawal, every home loan, they all connect to one silent guardian, the Reserve Bank of India. Welcome to FlukyFacts, where we simplify India's most complex topics in a way that even your morning chai feels smarter. Today we will explore how India's banking system functions and why the RBI is truly the heartbeat of our economy. Whether you are UPSC aspirant or just someone curious about where your money actually goes, this story is for you. Let's decode how banks, RBI, and monetary policy together keep India's financial pulse strong. Let's start simple. What exactly is a bank? Imagine a bridge connecting two sides of a river. On one side, people who save money. On the other side, people who need it to grow business, buy homes, or fund dreams. Banks stand in the middle, collecting deposits, lending loans, and keeping the economy blood going. But here's the question. What if this bridge collapses? What if bank lend recklessly or print more currency? That's where RBI steps in. The protector, the regulator, and the ultimate referee of India's financial game. The Reserve Bank of India was born in 1935 under the RBI Act of 1934. During British rule, it started as a private entity and became truly Indian after nationalization in 1949. Its purpose to regulate currency, control credit, and maintain monetary stability, ensuring India's financial heartbeat never skips a beat. Its headquarters is in Mumbai and its emblem, a tiger under a palm tree, beautifully captures the strength and stability. Today, the RBI is not just a regulator, it's the conductor of India's financial orchestra. RBI is not just one person in a room making decisions, it's a well coordinated system. At the top sits the governor, supported by deputy governors who oversees areas like monetary policy, financial supervision, and currency management. Below them, a central board of directors ensures checks, balances, and strategic direction. It also manages subsidiaries like NABARD, NHB, and DIC, supporting agriculture, housing finance, and deposit insurance. In short, the RBI is like the brain of the economy. Every pulse of financial policy originates here before reaching the rest of the system. Now, let's look at what the RBI actually does. It performs several vital functions. Monetary authority controls money supply and interest rates. Bank regulator keeps banks disciplined and financially healthy. Currency issuer, the only authority to print Indian rupee, manages foreign exchange reserves back to government, handles government accounts and loans, lender of last resort, helps bank in emergencies. Fun fact, the RBI directly or indirectly manages nearly 85% of India's money supply. No wonder it's called the heartbeat of the economy. Yes, where the RBI becomes both an artist and a scientist. Its job to keep inflation in control while promoting growth, a balance that easier said than done. It uses tools like the repo rate, reserve repo, CRR, and SLR to control money flow. When inflation rises, RBI raises rates to make borrowing expensive. When the economy slows, it cuts rates to encourage spending. The monetary policy, or MPC, meets every 2 months to make these calls. RBI target inflation is between 4% plus or minus 2%. Too much money causes inflation, too little causes slowdown. RBI's job find that sweet spot, just the right pulse for growth. India's banking structure is like a giant tree. At the top is the RBI, the apex regulator. Below are schedules bank divided into commercial banks, public, private, and foreign, regional rural banks, or simply known as RRB, and cooperative banks. Together, they form a vast network over 1.6 lakh bank branches and 100 crore plus active accounts. It's not just about money, it's about trust, reach, and inclusion. Public sector banks are like the solid roots of the tree, stable, government backed, and present in every corner of India. Private sector banks are the flexible branches, innovative, tech driven, and quick to adapt. Examples: Public State Bank of India, Punjab National Bank, and Bank of Baroda. Private HDFC, ICICI, Axis. Both are regulated under the Banking Regulation Act 1949 by the RBI. Different ownerships, same rule book. That's how RBI maintains discipline and trust across the system. RBI has evolved with time, adapting to crisis and reforming before things collapse. Let's look at some milestones. 1969 and 1980. Nationalization of banks, expanding public sector reach. 1991. Liberation, opening up to private and foreign banks. 2016. Insolvency and bankruptcy code, tackling bad loans. In 2020, pandemic moratorium, shielding borrowers during uncertainty. Each reform was a response to a challenge, and every challenge strengthened the system. That's foresight, not reaction. The true mark of a good regulator. One of the RBI's biggest achievement is making banking universal. Through schemes like PM Jan Dhan Yojana, India created the world's largest financial inclusion program. Zero balance accounts for millions, direct benefit transfers or DBT ensures subsidies reach directly with no middleman, and UPI, our digital hero, now handles 12 plus billion transactions monthly, and RBI's financial literacy programs. And suddenly, banking is not a luxury anymore, it's a basic right. If money is blood, digital systems are veins. From NEFT to RTGS to UPI, RBI has created the backbone for India's cashless economy. And now the next leap, the digital rupee, a blockchain-based central bank currency. RBI also regulates fintechs, payment aggregators, and sets cybersecurity frameworks to protect your transactions. Truly, India's digital revolution run on RBI's rails. But being the heartbeat isn't easy. The RBI faces many challenges like NPS, bad loans that weak bank, inflation versus growth, top to balancing act, global volatility, currency shocks, oil prices, wars, cybersecurity fits in a digital age, climate finance, a new frontier for sustainability. Despite all these, RBI continues to steer India's economy with trust, discipline, and innovation. The future of finance is green, and RBI is leading that change. It promotes ESG norms, support renewable energy funding, and pushes banks to assess climate risk in lending. In 2021, RBI joined the Network for Greening the Financial System, a global initiative for sustainable finance, because financial growth means little without environmental responsibility. For UPSC aspirants, this topic directly connects to GS Paper 3, Indian economy. You can expect questions like critically examine RBI's role in ensuring monetary stability and financial inclusion, discuss RBI's role in regulating India's digital economy. A smart answer highlights three themes: monetary stability, financial inclusion, and institutional trust. Always connect RBI's policies with India's growth story. So, to wrap up, banks keep the economy poor, RBI keeps it stable. Together, they make India's financial system dynamic, trustworthy, and future ready. Thank you for watching FlukyFacts, where learning meets simplicity. If you found this video helpful, like, share, and subscribe to support our journeys. Now, your turn. Which of the following is not a function of RBI? Option A, issuer of currency. Option B, lender of last resort. Option C, banker to private companies. Option D, regulator of monetary policy. Comment your answer below and we will reveal it in the next video. Until then, keep learning, keep questioning, and remember, money makes the world go around, but RBI makes sure it doesn't spin out of control.